All
Yep.
right. We are back on Wednesday night, coming to you live from Investing Education Academy. Leon and I have a really good question for you. Do you know what happens when the stock market starts off the year really well? Does it end the year really well? And before we go into why we chose that topic today, I wanted to again say thank you, as we normally do, to all of you all for showing extreme support. Let me see how to hit the one button. The podcast has been doing really great. You all have been sharing it, subscribing, and the YouTube station is actually starting to pick up some traction. So an amazing number of you all are searching for Investing Education Academy on YouTube. And we've been told that people are listening to the videos over dinner. So that is kind of an awesome thing. Thank you all for sharing this information with your family. And earlier today, I was interviewed by a company, and one of the things they asked by a podcast, and they asked, what do you want the legacy to be for Investing Education Academy? And it was pretty, easy to answer. We want to start multi-generational wealth for our community. And I mean, we're happy to do it for anybody, but, we really want to see it in our community because right now we aren't investing. We're, if you've been to Investing Education Academy Facebook group, you'll notice we're actually putting posts of some of the accounts that we've helped people with. And one person called me and asked me if the numbers were fake. And none of those numbers are fake. And if you haven't seen it, I suggest you go to Investing Education Academy and on the Facebook groups, just search it in the search bar and take a look at that. It's 3 accounts, and it talks about why we need to put our money into an investment platform versus traditional, investment. And I don't even want to say investment, traditional savings platforms. Even to the point where somebody contacted me and said, they really don't agree a correction is coming. And I was, Leon, I had to hold myself back. I was like, oh, so everybody talks about a correction is coming. And the reality is they're right. There is always a correction coming. There's always a bull market coming. There's always a crash coming. There's always a correction from the crash coming. There's always a correction from the highs coming. There's always something happening in the market. So the person to whom said that to me, you are absolutely correct. But I can show you a portfolio that did about $80,000 in the last year because we decided not to wait for the crash to invest after the crash or after the correction. So today, I think the information is really relevant. Leon's going to tell you why we chose this topic. But for you all who are sending us comments, who are sending us emails, keep them coming inside of the group. Everybody, this is personal. I just celebrated my 45th birthday. And Leon, thank you very much for doing the post publicly. I want to thank you for 37 years of friendship.
Yeah, thereabout.
Yeah, like 37, 36 years. It's a lot of people who out here who can't say they know anyone or have known anyone for 36, 37 years. It's a lot of people in IA who haven't been alive 36, 37 years. And we've been friends that long. And just publicly want to say thank you for posting in every platform that we have, kind of a celebratory flyer about my birthday. And, I want to say it's really cool that, in this space, we get to provide this information to the world. And again, I hope you all realize we can absolutely just have these conversations on the phone or online just between us and never say it to anybody else. Our accounts will do fine. But, we really, truly want the world and our community to understand the benefits of investing and understand what you're losing by putting your money in a savings account. And that includes CDs, which are certificates of deposit. That includes double E bonds, E bonds, HI. That includes some money markets. It depends on what you put the money in the money market for, of course. But the bottom line is we want to bring something new. And investing is not for everybody. So we don't expect everybody to hear this and go, okay, I'm on board with them. We don't think that every time you see Leon and I, you're going to share these videos. But as quickly as possible, we're going to tell you, we have experienced a lot of success in the market. And Yeah, I really hope you go over to our Facebook group, Investing Education Academy, and just check those 3 accounts and leave a comment. Tell us what you think when you see it. So, Leon, if you can tell them why we chose the topic today, I will go ahead and do some housekeeping.
Yeah, just on that note, there was also a member inside the Facebook group, aside from Brent, who also posted his account and showed the growth. He actually told his story, which was really kind of inspiring. He told how he was basically down on his luck, basically flat bottom, and then built himself back up. And then he shared his account, his statement, showing the growth of his account over the years. Got a new job, bought a new house, moved into another new state. So he really battled back, and what he was showing with his account was how his account has grown. I think it was via his 401k, how his account has grown over the years. Look, we're not knocking. I mean, 401ks are one thing we encourage people to invest in, because 401ks invest in the markets. What we do say is that we also hope that people would take their check, the check they receive themselves, and also invest some of that money in the market as well. But 401ks are great. 401k, and especially if you get a match from your job, that's free money. That's all day. So like Brent said, check out Investing Education Academy on Facebook to see those posts. So today the topic is, and it's something. So the reason I came with this topic today was something I was watching today on TV between Bloomberg, CNBC, and like Brent said, people are. This is somebody made the quote today. This is one of the most hated bull markets ever, right? What I mean by that is everyone is petrified, scared that this monumental, oh my God, COVID type crash is right around the corner. And I'm still baffled on why people think that is. Most crashes, like we always said before, typically in a year, you'll get anywhere between a 5 to 20% correction in the market, and then the market will resume higher. So that's normal, that's part of the market. The market doesn't go straight up. There are pullbacks anywhere, like I said, from 20% is pretty extreme, but really anywhere between 5 and 15% you'll see typically in a year. But everyone is really, 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 all the Wall Street analysts now are putting out all these warnings, maybe you want to raise some cash, or you want to start buying, put options to protect your portfolio, and all this just fear. And I'm just I get it. I get it. I mean, crashes hurt. COVID was an example, came out of nowhere, but that was an external event. The market just doesn't typically crash out of the blue.
Well, Leon, yeah, let's talk about that, right? So with COVID, even with the market crashing, you're talking about 2 months before the market started to climb again. 2 months it was, at its lows.
The COVID crash was the fastest crash. It dropped 35 days. It dropped 35% in 30 days, and then recovered the fastest. I believe it was a month or two before it actually made a new high from the crash. So yeah, but
no, I mean that 2-month period. So for all those who are thinking, oh my gosh, when this correction comes, or even if you're extreme and you think another crash is coming, who cares? This is part of the market. This is a buying opportunity. And this is also why we have strategies, and we talk about owning, these investments for, 3 to 10 years. And even if you're just looking at 2 years, 3 years, 4 years, would you prefer to put your money into a savings account that is going to pay you 0.05%, 0.06%, 0.06% interest rate for the entire year? And for those of you all who are like, oh, I have an investment returning me 4%, I'm in good shape.
No, you're not.
That's it.
So I'm gonna just make a point. So again, this is not to toot my own horn, not to brag.
No, toot your horn. Yeah.
As of I'm fanatical about this. I check my account every day, and as of today, I am now up 66% on the year. And I will say that includes crypto. So it's crypto, stock. I am up 66% on the year. The way things are going right now, if we don't get this huge crash, I will more than double my money by the end of this year. Double my account by the end of this year. And like Brent said, if I had my money sitting in a savings account earning 0.05, 0.06%, it would take me over 1,900 years to double my money. So I mean, and literally, that's not literally, I did the math. It would take either 17 or 1,900 years to double my money. When this year alone, I most likely will double my my investment accounts in 1 year. I'm already up 66% this year. The market is up about 20%. So I'm up, what is that? So I'm up, what, 4 times the market, 2 times, what is it, two or three, no, 3 times the market, 2 or 3 times the market than what the general market is. And again, not to my horn, I'm just saying, we show people inside Investing Education Academy how to do this. It's not hard, not rocket science, just following the data. And so,
no, this we're venting now. So everybody listening, this is a great time to share it. Or if you have questions, we're reading the chat right now. We will answer your questions the best we can. But I'm going to show you an account that I was going to post in the group. So if you're in, this is a good time to share it. This account I'm going to show you is today is its 1-year birthday in this particular account. I'm not going to show you the whole account. You got to be a member of IEA to see the whole account. But I'm going to show you the juicy part. So let me see.
The juicy part.
The juicy part. You got to see the juicy parts. So actually, this account is 1 year old today, September the 1st. As you can see, this is today. This account originally had about $192,000 in it. This account now has $82,000 additional dollars in it. So I want to say this again. This account now has $82,816.52 of additional money in it.
So that's what you're looking at about. You're looking about an 82%, 80+% return.
No, it's 41. It's 82,000 is up. It's 41.6.
Oh, sorry. Yeah. Okay. Gotcha.
Yeah.
Gotcha. Okay. Mm-hmm.
But I mean, still, you're talking about 41% rate of return. This is excluding crypto. And the crypto side is just ridiculous. But again, I'm showing you all this because sometimes we're like, well, that's not real. This is a real account. And just to show you this account, let me see. Hold on. Let me see if I can do it. This is the account on August the 28th. This was only like 5 days ago. And of trading days, the 28th was Friday. So that's only 3 trading days later. This was the gain on Friday. On Friday, this was the total unrealized gain, $77,968.
So basically 40% gain.
Yeah. And so look, also 39.25%. That's actually a great point, Leon. So this account was at 39.25% rate of return. And let me see. Now, with it being at 41.69% rate of return, you're talking about the account now is at 82,000. It went from 77 to 82,000. It's about $4,000 in less than 5 days. This isn't day trading. This isn't, checking, shorting a stock. This is just holding an account that's already been invested. And, people don't show you their accounts enough. And, we're showing you, like, these are real numbers. This is a real account. It's a screenshot. And, I mean, clearly you can tell from my handwriting, it's not doctored. But people are happier paying, like, the bank interest and fees for nothing, not even for a return.
It's for losses, because based on with inflation being running at 8-10% the last year and a half.
Because of COVID.
Because of COVID, you're not even earning. The account is paying you 0.05%, and inflation is 8%. You're losing money every day, all day. So
what would you do with $80,000 if somebody said, you know what, I'm gonna give you a bonus of $80,000 this year? How would you feel? I mean, would you turn it down? Because if you have a couple hundred in the bank or 100 in the bank, you're kind of equivalent to turning down a raise every year. And I don't know if anybody's ever thought about it that way, but again, imagine if somebody came to you and said, we'll give you a $20,000 bonus. I feel like most people who work would think that's a great thing. The market is saying that every day that it's possible. I'm not saying it'll happen. There are no guarantees, but the market is telling you it's possible, but people aren't taking it. Like,
and gotta say also there, of course, there is risk involved with those gains. Earning 40, 60, 70%. It's not like you said, you can go to a savings account and essentially lose money every day. But there's not a lot of risk with that. You can go buy bonds, not a lot of risk with that. There is risk in the stock market, as we know, but look at the returns. Look at your payoff relative to your risk, right? I mean, we said that the stock market drops anywhere from 5 to say 15% on average per year, but also it gains on average per year 10%. So bring those two together, you're either looking at flat on the year or up 10%, generally with risk. So, I mean, and remember, that's the market. Individual stocks do a whole lot more. I mean, like I said, right now I'm up 66% on the year, whereas the S&P 500, which is generally the market, is up about 20%. So, and I mean, and that's a great return. The market generally does 10% per year. The market's up 20% this year. But again, individual stocks is what I'm typically in. I'm up, quite a few percentages more than that.
Yeah.
So this kind of comes to our point we're talking about today. So everyone's always like, when the market's up pretty big. I mean, this year the market right now through August is up 20% on the. So what we have here is a chart, and I pulled this from CNBC. They did a segment today on this. Basically, the guy was talking about the best performing years through August the market has had. And what we have on the screen here is a chart of that. So reason we bring this up is because, again, people are always like, I missed the boat. The market's up 20%. We're already through August. I'll just wait till next year. Or people that didn't invest, people that have been like waiting for this massive correction to come to jump in. We're going to kind of show you why you should. We're going to kind of show you why you shouldn't have waited this long, because again, we're up 20% through August, and then what we're going to show you now is going to show you why you really shouldn't wait. You should, if you want to, if you can, and you have the ability to get in, you should get in the market. But so we're going to go through this now. So far left. So what we have on the screen is the 6 years that have the biggest returns through the month of August of that year. So on the far left is 1987. Through August of 1987, the market was the biggest return the market had for the first 8 months of the year. It was up 36%. Now, interesting thing about 1987 is that's the year of what they call Black Monday. And Black Monday, which the day, so you're going to see me look away from my screen a bit today because I have some notes. But Black Monday occurred on October 19th, 1987. That's when, at the time, the stock market dropped 20% in one day. Black Monday is legendary on Wall Street. It was the biggest single day drop, and it might even still be today. Single day drop. It dropped 20% in one day. And think about that. The COVID drop was 35% in 30 days. In 1987, the drop was 20% in one day. So just a massive, massive drop. But the year started out great. The year started out up 36% on right at the end of the year in October 19th, the market dropped 20%. Now you would think, okay, the market dropped 20% in one day. Everyone's running for the hills. The market's going to go to zero, and it's either going to return negative or basically return negative. That 20% drop in one day. At that point, people are going to run for the hills and take their money at the market. No. Strangely enough, 1987 with the biggest drop, single day drop, the market actually ended the year higher. Remember, this drop happened in October, like right at the end of the year. So 1987, the market actually ended up 2.03%. So it was up 36% in August, had this 20% drop. I'm sure there was trials and tribulations all the way through the last 2 months of the year, but the market actually ended up 2.03%. I was actually shocked by that. I figured a 20% drop, the market would end up down that year just because everyone was so fearful. But again, shows the resilience of the market.
Yeah, and also too, you got to think 1987, the stock market was competing with a bond and fixed asset class that was yielding somewhere between 8 and 12%. Mm-hmm. So it had very stiff competition in the traditional investing marketplace. So it's very different for a market like today when the other options are 1%, 2%. So even with that stiff competition, the market ended the year up 2%, which is actually pretty impressive.
Yep, definitely. So all right, so now what I'm gonna do, going through the rest of these. So 1987, we'll kind of exclude that when I go through these numbers because of that one-time event, the Black Monday. And it was just kind of an outlier move. So we're going to kind of just leave 1987 off the table. But remember, the market still ended up that year. So in 1975, that year through August, which is the second highest returning year through August, it was up 27%. Now that year ended, the market ended up 31.55%. So the rest of the year, the market returned 4.5%, right? So again, market was up and it ended high for the year. 1989, the market was up 26% through August. That year, the market ended up 27.25%. So again, another 1.25% the rest of the year. 1995, the market was up 22% through August. It ended that year, 1995, the market ended up 34.11%. So again, another 12.11% the rest of the year. And then 1997, the market was up 21% through August, and it ended the year up 31.01%. So again, another 10.01% for the year. And then now you have 2021. Of course, we don't know, but the market is up 20% so far this year. Now the question is, how will the market, how will the market do the rest of the year? So when we average out the first four before that, 1975, 1989, 1995, and 1997, when we average out the gains for those years, the average gain for the rest of the year is 7%, right? So on average, theoretically, the stock market should return about 27% for the year because we're at 20% now. The average gain over those previous dates was 7%. So when people are saying, "Oh my God, the market's at 20%," I missed the boats, I missed the ride. No, you haven't, because on average, when the market is up pretty sizably through August, it goes on to have higher gains of roughly 7% for the rest of the year. So people that are thinking, "Oh, is the market going to crash? Should I get in? Should I not get in?" I say, and IEA, we typically say, yes, you should get in. And the data supports it, right? Because the data says when the market is up sizably through August, it goes on to gain on average another 7% for the year. So, if you're on the sidelines thinking you should get in, the data says you should. Now, tomorrow, could the market fall and crash? Of course. Could it fall and crash in December? Of course. We don't know what the future's going to hold, what the future holds. But using history as our guide, we know that when the market is up sizably through August, it's not too late to get in. And we're looking for roughly another 7% gain through the end of the year. Will that happen? Who knows? It could only go up another 1%. But I definitely don't believe the market will be down for the year. And I am looking for the market to go higher into the end of the year. If it's 7%, I don't know, but I do think it'll be higher than it is today at the end of the year.
Yeah, and you got to think too, even with all these things happening, if you still have if you just net it and 1%, you're still destroying what you would get at the bank. Like, even if you just got 1%, you're still beating what you would get at the bank. So, I mean, I don't know what else to tell you all. And even that portfolio I showed you earlier, when we showed it, that account at one point was down 20% within 2 weeks of setting it up. Within 2 weeks of setting it up, that account went down 20%. And 1 year later, it's returning 41 point some odd percent after being down 20%. So, I mean, really, you can arguably say that the net highest gain is received is 60%, but I think that's a stretch. So I'll just stick with 41. 41's pretty good.
Yeah, so, 41's damn good, yes.
And, where else do people just show you their accounts besides IEA? The information that we show isn't to say, again, like Leon said, he's not just bragging. People don't believe it's possible. Like, people don't believe in 1 year you can make $80-some thousand. That's some people's salary for going to work, which is the exact reason why we talk about the fact that your dollars are employees. And when your employees go to work, they should yield you a return. In this case, it was 82 in the sum of 82,000. So, what are your employees bringing you? Go check your accounts. See what the bank, or if you haven't looked at your 401k recently, a 403b, 457 plan, 412 out, 418, whatever you may have, go check your account. Like, what is the interest rate in the last couple months or in the last couple years? If you have, a desire to learn more, but you are like nervous, you can join Investing Education Academy. We talk about these things. You can go to IEAmembers.com, connect with us, post your questions. Other members have some great insight. Then addition to that, if you're thinking about cryptocurrency and you're like, you know what, I really want to get into this crypto side of things, it's amazing. Let me start there. Oh my gosh, I kind of want to show you some accounts, but it's crypto, like it's unbelievable. It's unbelievable. I think today in crypto, it was a good day. I'm assuming you had a good day too, Leon.
Oh, it's great.
Yeah, I'm talking
Awesome.
like, yeah, it's like a 5,000 plus a day.
Yeah.
And so, I don't know what you guys are doing, but I hope you're getting familiar with the cryptocurrency marketplace. But either way, we really thank you all for, supporting this information, for sharing it with your children. That's huge. Our kids need to know this information. Your children are not too young to understand money. Sometimes our mindsets are too limited to explain it to them. Buy them a membership to IA. We'll talk to them. Show them these videos. They're free.
Join
Go.
Join the Facebook group. It's free.
Yeah, go, and then like we said, some people watch our Investing Education channel on YouTube. So you can go to Investing Education Academy on YouTube and subscribe. Every time a new video gets posted there, watch it with your kids, talk about what you see, watch it with your parents, talk about what you see. It's just too much information, and eventually some years are gonna go by and people are really gonna be in their feelings about what they did and didn't do. And we hope that we can get as many people on the right side of that sword as possible. So we are going to give you all our picks. Our picks are going to be one pick. Are we doing that today, Leon?
Are we doing the group?
So as you can see, sometimes we have to make decisions in the moment. Are we doing one to Facebook, one into the group, or are we doing both to Facebook? Today's the first.
Both Facebook, yeah.
Okay, so today, which might be amongst the last times we're going to do this, we're going to post both of our picks inside the Facebook group on Facebook. Soon, not sure when the time will come, we're going to start posting one pick inside of our Facebook group, and the other pick is going to be inside of our IEA members platform. And the reason for that is, truthfully, this is a lot of good information. And I think between Leon and I's picks in 2020, the portfolio is somewhere north of 50% rate of return. And it's valuable information. And we hope that you're using it. But you know what? We also want to take care of our members. So, one pick is going to be, and then we want to still, for those who, still a little nervous, thinking about the market, we don't want to abandon you at all. We're going to keep providing good content. So we're going to, for as long as we can think about, not going to say always, we're going to put at least one pick in the Facebook group, and the other pick will be inside of the Investing Education Academy platform. So did I miss anything, Leo?
No, that was it. I just want to say again, as we presented today, if you thought you missed the boat or missed the ride with the stock market, you have not. As we showed today, that when the market is up pretty solidly through August, it generally gains another 7% for the rest of the year. Now, remember, that's an average, right? That 7% is an average. In 1995, the market gained another 12% after August. And in 1997, the market gained another 10% after August. So will that happen this time? We don't know. But we do know that typically, on average, when the market is up through August, pretty big, it goes on to have higher gains through the end of the year. So if you're sitting on the sidelines, I would say dip your toe in, put some money to work now. Some of that dry powder.
I was waiting for it.
Put some of that dry powder to work. But yeah, just definitely get your money to work. We're more than halfway through the year. IA members, we know are doing great. IA Facebook group members, we know are doing great. People that listen to the podcast on Instagram, everyone that's following us, we know are doing pretty well. But you could be doing a lot better, a lot more if you can see a lot more of the content that we have inside the membership platform.
Yeah, and again, one of the members recently just said that their account isn't anywhere near ours. Our accounts aren't near some other people's.
Yeah.
Right. And that's okay. I know people who have a 400% rate of return. The things they do, I'm not willing to take that level of risk, but I'm cheering for them. I keep going, but not everything is for everybody. And
that's really good point real quick is that, like you said, whomever said that their returns aren't what our returns are, you have to look at the size. So we don't ever show dollar size or really even share size, because that really doesn't matter. What matters is the percentage. Yeah, percentage gain, right? So and if yours aren't, again, if you're not mirroring everything you're doing, and I will say that's also all the stocks that we choose here on the show isn't necessarily all the stocks in our portfolio. So we have inside the membership platform, we actually share with the portfolio Panthers exactly what Brent and I do for ourselves, and then what we do through the IEA brokerage account. So that's why things may not match up directly with ours. We don't present everything we do here. We do, like Brent said, we do have to take care of our members, and especially being the portfolio Panthers. But yeah, you gotta put your money to work. Please get your investment dollars out of savings accounts and out of anything that's an interest bearing account. And like Brent said earlier, CDs, savings accounts, bonds, anything that's interest bearing you're losing money every day. So market's up 20% so far. I mean, if you just went out and bought, I'll give you a symbol. The symbol is SPY. That tracks the S&P 500. If you bought that on day one, January 4th through today, and forgot about it, you're up 20%. Doing nothing, just you're up 20%. So yeah, I mean, you gotta get involved. If you're not yet, you gotta definitely get, and make it a, we always say dollar cost average. Put $5 to work every month. Put $10 to work every month. Something.
And I'm just gonna give a shout out to attorney Beverly Winstead, because she is in the chat heavy. If you are investing and you're at that place now where you're like, oh, I gotta figure out how I'm gonna pay these taxes, or what type of account do I set up to minimize the tax liability, you should get in contact with attorney Beverly Winstead at the law office of Beverly Winstead. So, I want to do that commercial because we appreciate our members, and especially when they show support like Beverly attorney Winstead has since we started, since day one, and she is a portfolio Panther. But I hope I don't know if I can say it, but I'll allude to her return is well into the double digits.
Oh, real quick, I just want to make a point about that. So we put out a newsletter every month. And we send it to our ecosystem, people kind of that deal in our email. And so the person working on our Ashley, big up to Ashley, who's working on our newsletter, she had an idea to put some testimonials. And I was like, yeah, I got a ton of them, but I had to go look for them from like end of last year, kind of when we started. And one of them was Beverly's, Bev's. And it was funny at the time. So this was I don't have to remember the month, but it was like towards the end of last year. She had said in our Facebook group at that time, a year ago, that being involved with IEA, she was seeing north of a 40% return. And this was a year ago. And this was only a few months into IEA kind of getting started, and Beverly kind of followed what we're doing. And she said at that point she was up 40% in her account. So like Brent said, I can imagine now she's in probably double digits, if not more. But that's just an example of what we've been able to do for people. And again, we're not saying we're tooting our own horns, but the only thing we're trying to do is just expose people to what's out here and what's possible. We're not geniuses. We're not the only people doing this. But we are students of this game, and we know that we know it very well. And we definitely want to share that knowledge, with everyone here.
Yeah. So for everybody who's interested in the pitch, you can go to Facebook and type in Investing Education Academy in the search, and you will be able to find our Facebook group where we will be posting our picks for the day. And if you are in the need of a tax attorney or just to do some tax planning, we're coming to the end of the year. Attorney Beverly Winstead has posted her email address and telephone number in the chat. For those of you all who are listening to the podcast, I'll just say it. You can go to www.irshelpattorneys.com, or you can call the law office of Beverly Winstead at 301-306-1234. That's just fun to say. 301-306-1234. Please reach out. Again, if you're doing tax planning, she does a number of other services, but right now I'm just talking about if you're doing tax planning or if you just need to talk to a tax attorney about a situation with the IRS. So with that being said, Leon, we're going to head over to the Facebook group to drop our picks.
Yep.
Cool. If anybody's interested in joining IEA, please go to IEAmembers.com. Choose which platform makes the most sense for you. And we look forward to seeing you in the group. Everybody have a great day.